Well, good evening, all. Ira Epstein with your financial market wrap-up, and this wrap-up is for April 2nd. It isn't April Fool's Day. It's the day after. I guess you'd call April 2nd Liberation Day. I called it Tariff Day last night, and I got somebody slapped me in the face on Facebook, but I'll stay with what my Tariff Day is. I don't know what's so liberating when you see a stock market down this much, when you see down hard on the energies, interest rates. Are you going to crack 4% in the 10-year? You could with this action tonight. And I wrote today in my newsletter that you have to be careful because you got thinner trade than normal in evening trade. You got to understand what time it is in Asia. In Europe, people left the offices and they're all going to wake up and you're going to get yin-yang effects all over the place. Is this the worst thing? So let's go and understand what we're dealing with, and then I'll give you my take. You didn't get any one thing from the president. You got layers of things. So let me explain them. You want to do business in America and you don't produce that good here. You have a 10% tariff minimum on whatever you're going to sell. Certain countries that have a lot of tariffs on U.S. products, and I don't know the formula the president used. He didn't share that. But he's adding up the tariffs, their VAT, and their currency manipulation. How do you figure that out is beyond me. And he's looking at about half of that, and he's saying, okay, that's your baseline. So if you have a tariff of 50%, he's going to make a tariff of 25% on your goods. Got it? He's taking half of whatever they have decided with their formula at the White House, and that's how they're working that. Another layer is if you're an auto manufacturer and you don't manufacture that auto in the United States and you are not based in Canada or Mexico covered by the USMCA deal, you're going to have a 25% new tariff on that automobile. If you're part of the USMCA and your cars are compliant with it, no change at all. He's honoring the USMCA deal. The fentanyl tariffs, though, that he put in place on Canada and Mexico, and we're calling them fentanyl now because I'm not hearing any border problems, but drug problems are still there. Those stay in place until those are negotiated down. There's no reciprocal tariffs on Canada or Mexico. That's a big plus. He immediately said no tariff on lumber. That's a plus. No tariffs on semiconductor, pharma, copper, or gold. Why copper? I told you we produce about half of what we need in the United States. You can't do that if you want our economy to go. And this just gives you down here what some of these tariffs are. Now you're going to say this is terrible, and I say this is stage one. We didn't know what the first stage was going to be. So now we know what it is. So what will happen in my mind is the president sits back now and gloats for a little bit and says, okay, we've hit him and we've hit him hard, those that have taken advantage of the U.S. Now they can come to us and talk, and down to a 10% number, he can work with those people to reduce the tariffs, but he's going to want to pound the flesh for it, and he'll probably get it. We're still the big cheese, and we're the big consumer. Does it hurt Europe? Absolutely. Does it hurt the Asian markets? Absolutely. China has been insulating itself. It's trying to get away from the U.S., but countries where manufacturing moved, such as Malaysia, such as Vietnam, they're getting hit real hard. So you can get ready for the retailers to be hurt. This definitely hurts the Walmarts, the Costcos. I can go on and on with the companies. And those neat goods that you and I buy everywhere and that you read they're made in X country, those have just gone up in price. So inflation is here. That's why gold is getting a bid, but it's discounted a lot. Sometimes it's buy the rumor, sell the fact. In this case, I think this was the worst. I don't want to say it's the worst thing the president could have done. The worst scenario that the market had in mind. It wasn't expecting these layers. That's what I'm calling the worst. You can see immediately you're getting big bids in all of the interest rates. So are we going to crack 4% for all the wrong reasons in the 10-year note? Well, the president was gearing on that. 4%'s a target number I know they have in mind, and boom, you're coming down there. So just pay attention to what this is going to mean with it. When we take a look tonight at what's happening in the stock market, well, for the week, you're down about 2% so far, as you can see. For the evening, you're down 3.4%. So remember, we had a big up today, and then we let go. Remember this too. You had an outside day up. Remember my warning. If you take my outside day course, I'm not going to tell you what it says, but if you take out that low, there's a big signal that comes from it. Where'd the market go? Well, you now have lower highs, lower lows. The market's falling hard. It fought its battle at what I call the line in the sand, the 18-day average. And now the Bollinger Band becomes one of the important numbers. Can it break out of here and run? That's what we're going to look at. You're nowhere near embedding. And are you oversold? No. It's hard for me to tell you that you're down 200 points tonight, but you don't have a reading yet under 30. You are under the Bollinger Band, so I'm not expecting new, fresh selling under that number. In the NASDAQ, not quite the same. You're under the Bollinger Band, but you're instantly oversold. The tech companies, they're hurt. You bring in semiconductors out of this country, there's a tax on them. There's no break anymore. Taiwan, you got problems, all right? I mean, as people in Asia are waking up, if you're Hyundai, you've got a problem. Your cars just went up 25%. Most aren't made in the United States. When you look at the Dow coming down to the lower Bollinger Band, and again, a market that is not in oversold territory. From my work, you have to be under 30 to be oversold. In the Russell, oversold territory, cracking down through here. But this is the type of index that if interest rates crack 4% and start staying there, I want to start looking at some of those companies. Not all of them. Maybe the index is wrong, but some of the companies. In the DAX, well, we haven't seen it open yet, so I don't know what to tell you, but I can't imagine it does well. I would think the market's a candidate to go right for the Bollinger Band, if not lower on that. When we look at the bonds and notes, you can see you're overbought and you're pushing up because this was a shocking moment in this market. And in the 2-year, what's happened is suddenly tonight the swap market is pricing in 3 cuts in interest rates. But in order for that to happen, an event has to take place. We know that these tariffs are inflationary. If you don't believe that, I don't know how to explain to you why the markets are down. You just added price to everything, a minimum 10% if it's not made in America. Got that? In 90% of the cases. All right, so what else? Is this going to hurt the U.S. jobs market? Are the American public going to pull back and be scared and not want to buy anything right now? Do you feel like you got to go out tomorrow and book a trip and take a vacation out of the country? Probably not. So the airlines will probably be down. The cruise ship lines will see a pullback. Hotel stocks could get hurt temporarily. And you're going to look at your portfolio in the morning, if it stays just the way it is right now, and go, oh, why did I have to go through that? All right. But I don't think this lasts that long. I think that, as I said, the negotiations will begin from here and we will find the plateau to come in on the market, let the worst get into the marketplace. I mean, it's just a calming thing. And maybe the highs of the year are in place. Okay. But where's the lows of the year going to be? That's what you look at in the stock indices. In the dollar index, well, is this going to hurt the dollar? I think it will. So it may get a little bit of a safe haven bid, but I wouldn't be surprised down the road here that this weakens the dollar. I don't see this helping it, 1, 2, 3. In the euro tonight, you can see the market is trying to come up. It's up right now a bit here. So again, I think the market is saying the dollar's going to get hit. We'll see if that comes out. In the British pound, you rallied up to the upper Bollinger Band. Again, other currencies, they're going to cut interest rates way quicker than the U.S. does. The central banks in Europe, be it the Bank of England, the European Central Bank, this almost forces that they have to make moves. So we will see how this all comes about. That's my opinion. Could I be wrong? I'm like Mr. Swiss cheese. I can be very wrong. Bitcoin. down 4,600 bucks, almost 5% tonight. I've said to you night after night, this is not a safe haven play. This is an investment similar and tracks the NASDAQ. Kaboom. That's what's been going on. Oil was staying strong as can be, but these tariffs, any tariffs, I kept saying, why is this going up? You've heard me say it every day. I don't get it because tariffs can't be bullish for that type of business. And we know that OPEC wants to put more oil out there. Maybe it was Venezuela off the market, their oil. Maybe Iran. There's another aircraft carrier group, the Venson, is going out right now, putting itself out with the Harry Truman group that's out there. So the U.S. is preparing for whatever mischief Iran may play with the Houthis and so on. You're getting two carrier groups again. There's more than meets the eye when that takes place. Is that bullish or bearish, the crude? It could have been bullish in taking it up, but today's news overwhelmed the market for the moment. So we'll see what that does. You're losing the Bollinger Band, but you've hit the target, which was the closest main moving average, and you've already done that. Same in the WTI. Heating oil could easily fall back right here. It has not hit the downside targets. I'm looking for that. And you know that I'm looking at gasoline. This could be the break where we get it and the opportunity shows itself. So I'm going to be looking. Natural gas, the rallies are still being fully contained at the 18-day average. I see nothing that's bullish on this at this point. Thank God we're an exporter, not an importer, and people need our natural gas. They can tariff it all they want. Where are they going to get it? That's the problem, especially Europe, all right? They're going to go to Russia to get it? Now you got the problems. So how do you put this all together? Well, that's what you want to get with us for and see what we're going to write tomorrow in our newsletters, how it's going to affect grains, the meat markets, the soft markets, how the currency play is going to play this all out. You go to iraepstein.com, free offers, sign up, and take advantage of that. I'm Ira. You have yourself a great evening. I'll catch up with everybody first thing in the morning. Take care.